The S&P 500 finished the week slightly up, but closed out the month of April up quite a bit. Bitcoin also rallied this week, even though it had some suspicious price action. Next week, we have three big catalysts that could move the markets one way or the other, starting with the Fed meeting on Wednesday, Apple's earnings on Thursday, and then the non-farm payroll report on Friday. So what's next for stocks and Bitcoin? Over the course of the last week, it was Microsoft and Meta's earnings reports that really buoyed the markets. All of the bearish analysts who said that we could expect earnings weakness haven't actually seen their predictions prove out this quarter. At least not in big tech. Some of the industrial names like Whirlpool have been disappointing. So now we've got sort of a mixed bag between the bulls and the bears. A lot of people are piling in big tech as if it's some sort of a safety play. As we go into next week, it's Wednesday's Fed meeting that will be key. At this point, it's almost certain that we're going to see a quarter-point rate hike. The big question is going to be what happens in the press conference after the rate hike. If Fed Chair Jerome Powell comes out dovish and says we're going to take a pause and look at data, this could potentially result in more of a rally in stocks. However, if Powell comes out hawkish and says that he's not happy with what he's seen in the stock market getting so frothy, then that actually might do the opposite for the stock market. We could see a pretty big sell-off. It's basically binary. It's going to move the markets one way or the other. The last of the really big cap tech stocks, Apple, reports on Thursday next week. Now, this is unusual. Usually, Apple reports with the rest of FANG, which reported last week, so it's kind of on its own. To make matters a little bit trickier, there's a lot of reports that Apple has seen a 40% drop-off in the sales of its Mac units. It's important to remember that the majority of Apple's revenue doesn't come from its computer division. It comes from the wearables, the iPhone, and the iPad series, not the Mac computers. But that could show a weakening demand for all of its products. Apple has a tendency to rally into earnings, even when it looks like the earnings might disappoint. So I will be taking profits if it continues to rally, as it is the biggest position in my portfolio right now. On Friday, we get the Labor Department's non-farm payroll report for March, and that'll show us how strong or weak the job economy is. Now, as weird as it sounds, this still remains a bad news is good news kind of situation. If the job market is weakening, then that might mean the Fed's going to lay off for a while, and stocks could rally on that. However, if the jobs report comes in hotter than expected, that could be negative for the stock market. So again, a third catalyst that could dramatically move the market one way or the other. Over in Bitcoin, you can see that we had a particularly strange week. Specifically Tuesday's candle, which you can see from the peak to the trough, it rose a total of over 10%. This move wasn't actually done in a bullish way though. When we switch to one of the shorter time frames, we can see exactly what happened during this particular time period. You can see from the low on Tuesday morning around 10 o'clock Pacific time that Bitcoin rose almost 10% from its low to its high. And although it looked like it was consolidating for a while, it suddenly dropped a significant amount, dropping 8.46% in an hour on no news. This comes back to me saying over and over again how careful we have to be when it comes to using technical analysis to find support in Bitcoin. The market is relatively small, so it can take a very small amount of movement, one big sale, and that can cause an entire epic market sell-off. Although we still don't know for certain, some of the crypto news outlets like CoinDesk believes that the result of this sell-off came from the US government liquidating a large amount of Bitcoin and Ether that it had seized over the years. And again, one big sale and you see an 8.46% drop in Bitcoin. As we could see, Bitcoin did end up rallying from its low and returned back to that consolidation point that it's been at for quite some time. When we switch back to the daily, you can see exactly what happened. We're right around these key points, and that parallel channel that I drew from last week is still showing quite a bit of resistance at this point. It's important to remember that we are approaching the end of the month, and as you can see from the beginning of the year, from its low, Bitcoin has risen 100% from where it was in November to where it peaked out in April, so a sell-off is probably likely. When we refer back to the Fibonacci retracement that I drew last week, you can see that Bitcoin did start to approach this 38.2% at $26,573. You can also see that I've created overlapping parallel channels. In addition to the bear bearish ones that I had drawn last week, I drew some bullish ones that would counteract it. And you can see how they actually give you ideas of where there might be support and resistance in Bitcoin's movement. Personally, I still think we haven't seen enough of a pullback in Bitcoin. And I still believe that 50% retracement level down here at $25,184 is very much in play. I'm never short Bitcoin. I'm only long. So even though I think it could sell off, it's simply because I want to accumulate more Bitcoin at lower price levels. After that 50% retracement, we go back to what we had last week with this support level at $23,950, then $22,000, $20,627.10, and then the low in March, which is at $19,300. The end of the month, the end of the week, and the end of the day all happen on Sunday, and it tends to be a very pivotal time for Bitcoin. Whenever we've seen a positive week or month, Bitcoin does have a tendency to retreat a little bit. So it'll be interesting to see what happens next week and if the news catalysts that move stocks actually move Bitcoin too. Over in the investments in play, this week's winner was Meta, which after its blowout earnings report gained 12.86% on the week. Zuckerberg has really turned the company around. After cutting staff over the last couple of months to demonstrate cash flow increase, Meta has returned to being its form, one of the best tech stocks you can be involved with, and that's why it won this week. This week's loser was Roblox, which dropped an additional 12.53% this week on the back of its monthly numbers report from last week. Roblox is one of the class of 2021, and it has a tendency to fluctuate wildly. The volatility in this stock is serious, and I believe there's still further downside for Roblox. It's not done selling off yet. Over in the speculation in play portfolio, this week's winner is the cannabis equipment provider GRWG, which rallied 11.4% this week. This was as a result of U.S. Congress once again revitalizing the Safe Banking Act. This act would allow cannabis providers to be able to get bank accounts and use credit cards. Currently, it's an all-cash business. Although the cannabis bulls' hopes are up that it will actually pass this time, I'm more of the kind to stand back. I have pretty large positions across the board, and I will add on weakness, but not a whole lot. This is the third or fourth time that they've pulled the rug out on us. I'll have a lot more faith in the sector when the bill actually does become law. But when that will happen is up for grabs. It could be in a couple of months, it could be in a couple of years. This week's loser was Pinterest, which dropped 16.06%. Now, even though Pinterest actually reported a surprise upside for its earnings report, it gave pretty poor forward numbers. And this is an example of how the stock market works. You can perform really well, but it cares more about where you're headed, not where you're coming from. And therefore, Pinterest sold off. In the investments in play portfolio, I took profits in Amazon this week when it rallied into earnings. Whenever a position I own rallies into a binary event, I do like to take profits. Even if Amazon ended up reporting a good quarter and headed higher, I'd rather take profits before earnings if it's rallying into earnings. And taking profits in Amazon turned out to be a good move because in addition to Amazon pulling back a total of 6% from where I sold, I was able to lock in 31.73% in gains on shares that I bought for $83.81 back on December 22nd of last year. This sale at $110.40 also lowered my per share cost 9.45%, down from $74.10 to $67 even. From here, my next buy target is $81.98, slightly above Amazon's low from last year. And my next sell target is $146.35, below Amazon's resistance it's seen at that level repeatedly in the past. I took profits in Google on Monday at $106.55 for the same reason I did so in Amazon. It was rallying into its earnings report. However, unlike Amazon, Alphabet actually reported good growth in its cloud sector and ended up rallying, which is good because the artificial intelligence portion of this company seems to be floundering. Whenever the CEO references AI, he always does it in vague ways, and they haven't really introduced a product that's worked in a very long time. So whether or not Google's on top of this is up for grabs. My sale locked in 25.21% in gains on shares that I bought for $85.10 back on November 3rd of last year, and reduced my per share cost 2.48%. down from $96.95 to $94.55. From here, I will add to Google at $85.05, above a key point of support that it's seen over the last couple of months. And I will take additional profits if it reaches $151.55, just around its all-time high. In speculation and play, I actually added to GRWG this week when it sold off before news of the Safe Banking Act broke. I made a buy at my next target on April 25th at $2.90, and this buy lowered my per share cost 4.79%, down from $15.65 to $14.90. And even though GRWG did break through and create a new bottom here at $2.77, it really rallied when news of the Safe Banking Act broke. From here, my next buy target is lower than its all-time low, down at $2.07, a price I calculated using the Fibonacci method. And my next sell target is at $16.50, above my new cost basis and below the next level of resistance GRWG has seen in the past. With the market continuing to rally, I continued to add to my inverse ETF shorts, in this case the QID, which shorts the NASDAQ 100 QQQ. I added more shares to my position on the 28th at $17.51. This buy lowered my per share cost 1.88% from $19.11 down to $18.75. And from here, my next buy target is $16.76, above a point of support from the past, and my next sell target is $19.14, below past resistance. I added more shares to my short position on the SPY this week using the SPXU with a buy that went through on the 28th at $13.11. This buy lowered my per share cost just 0.72%, down from $13.90 to $13.80. And from here, my next buy target is $12.90, not a whole lot lower than where we closed on Friday. And my next sell target is at $14.85. My short positions are really a small part of my speculation and play portfolio, which is a very small portfolio in itself. But since the market has rallied so much this year, I do believe we'll see a garden variety pullback at some point between May and July. Over in the pandemic portfolio, I took some profits in waste management with a sale that went through on the 25th at $166.64. This sale locked in 3.71% in gains on shares that I bought for $160.68 back on December 2nd of 2021. I'd gotten a bit bigger in waste management than I originally wanted and raised my cost basis up above where it was when I first opened the position. So when I had the opportunity to take profits and lower my cost basis, I decided to do so. This sale reduced my per share cost 11.61%, down from $110.05 to $97.25. From here, my next buy target is $139.52, a point of support that waste management has seen several times in the last year. And my next sell target isn't until $199.84, a point where we'll probably see psychological resistance. As we head into next week with all the catalysts that are on the horizon, it's promising to be a pretty hot summer, and there should be some excitement in both the stock market and crypto next week. Which way we're going to go is completely up in the air, so I do what I always do. I have a plan for both directions. What am I going to do if my assets go up tomorrow, and what am I going to do if my assets go down tomorrow? To learn more and follow along in all of the moves of my portfolios, you can check out my website, getirk.com, which is always 100% free. Please hit like and subscribe. It really does help out the channel. And I'll see you in the next video.